Good evening, traders. It is time to prepare to trade the best setups at the best prices. In terms of tonight's game plan, it's going to be short, simple, and sweet. I'm going to be breaking down the monthly chart, the weekly chart, and the daily chart, along with the 10-day, 30-minute chart on the SPY. On Friday, we absolutely crushed it, ended up going 4 for 4, a 100% success rate. If you added up all of the percentage gains combined, it was over a 700% return on the SPY and SPX trades that we ended up taking. I'm going to be breaking them down towards the end of this video. First things first, let's get straight into tonight's price action analysis. So, in terms of the monthly chart, this is what I want to bring awareness to. In terms of the monthly chart, it is signaling that we are due for some downside potential. We could see a little bit more upside potential, but in terms of the monthly chart pattern, it is saying that we're due for an overall pullback. That's just what the monthly chart is saying as of now. Now, breaking down the weekly chart, based off of what I'm seeing on the weekly chart, this is going to be the key for a bullish and bearish week. So in terms of this weekly chart pattern that ended up forming, if the SPY is gapping down, opening up lower than the previous closing price, that's signaling more of a drop and especially more of a bearish trend day heading into tomorrow. So if we're gapping down and maintaining below the previous closing price, tomorrow is going to be a day where we're going to be buying put options, trading for an overall bearish trend day and bearish overall close. Now, in terms of this overall weekly chart, like I said, if we're gapping down, it's going to try to be overall bearish, and then we could start to come back within the week to flip a little bit bullish, but overall bearish at first, then it could potentially have a bullish flip. I'm going to keep you guys updated along the way of the price action. But in terms of an overall bullish week and a strong bullish move, here's the main key in terms of opening out the gate. Heading into tomorrow, we're going to need to go above the previous closing price, and we're going to need to have a gap up to have an overall strong bullish breakout. If not, the most likely outcome is going to be bearish first, then later into the week start to recover bullish, but it's not going to be like a crazy breakout, more of just kind of where we ended up towards last week. So that's what I'm seeing on the weekly chart. Now, in terms of the daily chart pattern is very, very clear as well. So looking back throughout the chart history, basically in terms of this daily chart pattern, if the SPY is gapping down, maintaining below the previous closing price, and also in general just maintaining below the previous day highs, it's going to be a very bearish trend day where we're going to be focused on buying put options. Now, with that being said, in terms of the ES, as you can see right here, if you look at ES, we are currently having a gap down here on the ES, having a gap down here on NQ. So with that being said, we are already starting off with an overall gap down. Now, in terms of the SPY, let me prepare you to trade this overall setup that I'm seeing heading into tomorrow. Like I said, if we're opening up with a gap down, if we are maintaining below previous closing price, if we are maintaining below previous day highs, tomorrow is going to be a strong bearish trend day, where I would encourage you to get in on put options early, and I would also encourage you to leave runners and hold longer than you normally would, because based off of what I'm seeing on this daily chart signal, the strongest signal, if we're just gapping down, maintaining below previous closing price, is going to be an overall bearish trend day, and you should look to aim a bit more bigger than you normally would and look to leave runners. You can also play a little bit of heavier size if you like. You can size up just a little bit, and look to add to winners, set profit stops, and look to hold longer than you normally would. Because like I said, I'm seeing a very strong signal where as long as we're getting this gap down, it's going to be a strong bearish trend day, and that would be the number one play with the daily chart pattern, and especially just because we're a bit overextended here for the short term. Where we're due, it would make sense, especially if we're gapping down, heading into Monday, a nice drop, a nice sell-off, and then later into the week, we'd start to recover. I'm going to keep you updated one step at a time. So just understand, man, based off of what I'm seeing heading into tomorrow, this is the best opportunity, and the easiest way to make money within the overall market would be heading into tomorrow if we gap down. That's what I would prefer to happen, because based off of everything that I'm seeing is the easiest play, and you could look to hold and leave runners, and it's likely going to close very overall bearish trend day, and we're very overextended and we're already due for some sort of pullback. So that's what I would prefer to happen. I'm well aware if the market is gapping up, if we're breaking above previous day highs, that's a strong signal that we're going to push into the 630s heading into tomorrow. But as long as we're maintaining above previous day highs, as long as we're maintaining below previous closing price, as long as we are gapping down, it is going to be a strong bearish trend day. So in terms of this strong bearish trend day, here's what you need to understand. In terms of the SPY, this is the key support. This is the key level. Once we go below this level, SPY is going to fall off a cliff. The trend is going to be very bearish, and you're going to want to be in on put options. This is the make or break support level, 624.60. As you can see, this was resistance, 624.60. We had a strong breakout to 626.28. Came back down to retest that previous resistance, reacted as the support, but look, the market is already shifting bearish. And the reason why I say that is this was your previous support. Your previous support was right here, right? It retested this previous resistance, and when it spiked back up, which is normal, look what started to happen. It started to form lower highs and start to drop back down. And we are already seeing a gap down as well. So like I said, man, we go below 624.60 is gonna start free falling, is gonna start to have a big pullback. Now, in terms of where we're gonna be dropping to, this is what I want you to understand. These are gonna be the key profit targets. First level we drop to is gonna be the following, and the drop will likely be a lot bigger than this. First drop would be 622.60 right here. That's your first drop. Your next drop zone is going to be right here at 621.50. This is going to be your key level drop. So basically, in terms of like taking profits, again, you're going to be setting profit stops before this. If you're getting on this trade on puts, you're going to want to be taking profits in between this zone right here. In between this zone right around here is where you're going to want to take profits. Now, it's supposed to be a strong bearish closing trend day. If you want to try to trade against the trend, if you're seeing a strong bullish trend reversal signal confirmation, again, it's supposed to be a strong bearish closing trend day as long as we're gapping down, right? So if you want to try to make a quick trade against the reversal because you're seeing a confirmation, and that's a style of trading that you like to do as well, where you don't just trade solely with the trend, you make a quick trade against the trend. If you time it properly and you get the proper confirmation, you can do very, very well doing it as well. And that's, in terms of trading styles, I do that at times as well. So for those of you interested in that, if you're more professional as well, keep an eye on these levels for quick spikes. This level right here, there's a gap to fill at 620.45. The SPY has been consistently reversing at all of the gaps. All of the gaps on the SPY have been consistently reversing. If you've been studying the trend, whether it's, has a gap up and then we come back down to fill the gap, it starts to reverse. Whether we gap down, spike back up to fill the gap, starts to reverse. It's consistently having gap close reversals. The strategy is working flawlessly. So you can see right here as well, gap up, starts to reverse, right? So if the SPY is showing signals of a short-term reversal, if you're getting confirmations, ideally on the 30-minute chart, you can try a quick scalp on calls at 624.45, right? 620.45. We got a gap right here. Also some break and retest here at 621. Keep an eye on this overall zone. And if the bullish confirmation happens lower than the zone, then you could try it lower on the zone. In terms of the best levels lower below that zone would be right here at 619. So those are your three levels you're going to want to keep an eye on. 619, gap close reversal, 620.45, and then the higher level right here, break and retest 621.45. Again, if it's dropping below the lower levels, then you get the confirmation, then you can get in on that, right? Just understand, it's likely against the overall trend and more of a situation where later on to the day, as SPY is selling off, it has a quick spike, a quick reversal, is likely going to happen the first time it starts to test those levels with proper confirmations, right? And if you get in on that against the trend, you can make a nice gain. Just understand that's not meant to hold. You get in, you get out, you set the profit stops, leave runners on puts. It's supposed to close overall bearish, right? So I gave you the profit target zones, below 619. Next level below that is going to be 617.45. Next level below that is going to be 616.30. Next level below that is going to be 615, right? And then in terms of next level below 615, next level below that is going to be 613.60. Next level below that is going to be 612. Next level below that is going to be 611, right? So just understand, heading into tomorrow, main focus is puts. If we're gapping down, right? If you try to trade against the trend, it's nothing but a quick scalp and do it at the best levels with the best confirmations. It's likely going to try to bounce first at the overall best levels, even without potentially the confirmation. So keep that in mind as well. It's just your preference on style of trading. You can do both. You could just do one. If you're just going to do one, make sure you do the puts if we gap down. But just to give you some more insight on levels in terms of bounces for calls where we can bounce first, this is strong support where we're likely going to bounce first once tested at 611. This is a strong break and retest trend reversal level where we're likely going to bounce first as well, 612.50. This is a strong break and retest level as well where we're likely going to bounce first, 613.60 in between that zone, right? Next level above that is a 615 break and retest level, already been tested during normal trading hours in a sense. So that's not really too special in terms of that 615 level, but it's worth keeping an eye on. And then, but it's really not the best level for calls, just more of a key level to keep an eye on in that sense. And then this is very key, this level right here, this 617. 617 and 616.50 is a strong bounce zone as well. And then I shared with you the levels above that, 620.45 and 621.50, gap close reversal, break and retest. So heading into tomorrow, if we gap down, this is what you need to focus on. You need to focus on puts. You need to focus on getting in early at key spikes. You need to focus on the breakdown and retest strategy. What that is very, very simple. You're going to look for support levels to crack. So right here, this is 624.50. This is a support. You're going to look for a support level to crack. And then when it spikes back up, it does not have to retest that exact level where it cracked the support level. It could form slightly lower highs. So instead of going back to 624.50, it could go slightly lower. Say it's like 624, a little bit lower, right? As long as you're seeing the bearish lower high confirmations on the red 30-minute candlestick chart, you're going to want to be buying puts, because what's going to happen is it's going to keep on going down to the next level, right? This is previous resistance right here. Then when it hits the previous resistance, the previous break and retest level, it tries to bounce, and then the trend repeats again, where it does the breakdown and retest, and it keeps on trying to do these breakdown retests. So heading into tomorrow, you're looking for support levels to crack, and then when the spikes back up to those previous support levels that cracked, you're looking for lower highs, you're looking for bearish confirmations, you're looking to buy puts, and then it's going to retrace and start to retrace back to that lower level and start to crack that new lower level. And then it's going to try to bounce first at the bounce levels that I gave you first. So if you use this information, you should be green without a doubt heading into tomorrow. Based off of everything I'm seeing, this is one of those rare game plans that is going to work flawlessly. It should work with exact precision. This is a very surgical game plan. I'm telling you, this is the best setup at the best price. So use this information, print money at the speed of light. Losing is a personal choice. Now, in terms of the upside, let's discuss the upside. So I explained to you the most likely outcome with the bearish trend day. That's what I would prefer to happen if we gap down. Now, we need to be aware of break of trends. We need to be aware of, the other potential outcome. If we're not gapping down, what's the trade then? So if we're gapping up, the main way I would look to trust SPY is a break of highs. If we're breaking above 626, we're starting to break out and we go to like 628, 629, we start to have like a 2-point plus breakout. If we drop back down towards the previous day highs or towards the gap at 625.20 or towards key support at 624.55, I would look for a strong floor. If the market's having a gap up, if the market's breaking above previous day highs, and then we're starting to drop back down towards one of those key levels I gave you, gap close reversal level, previous day highs, and we're forming a strong floor, then I would look to buy calls for a potential bullish trend day. But even if that happens, if we start to go below 624.50, is not looking good. Is not looking good. Unless we had such a massive breakout above 626, went to like 629, 630. If we start to go below this 624.50, it's looking like an overall strong bearish move. So again, the only really way I would consider this to be bullish is if we're gapping up, we're breaking above previous day highs, and we're not just breaking above them, we're going at least 2-3 points above, then we're forming higher floors at previous day highs or at the gap close reversal. And I'm well aware, even if that occurs, if we go below 624.50, it's going to flip super bearish. So that'd be the game plan. If we're having a strong gap up, if we're breaking above previous day highs, use the best, the absolute best. The reason why I say the absolute best, because we are at a very high level within the SPY. We're obviously due for a short-term fucking pullback within the day trading, right? So be extremely cautious and careful and use the best confirmations if you're buying calls. Just understand, if it gaps up, if we break above previous day highs, it's going to try to be overall bullish. But look for the best break and retest confirmations, right? Look for the green, red, green patterns. Look for the bullish 30-minute candlestick confirmations. Look for the break and retest strategy. Look for the gap close reversal trading strategy. So with that being said, I want you to use those levels. I want you to use this information And I want you to reflect and look at this 10-day, 30-minute chart as a mirror and study how the SPY has reacted, right? So right here, it had a gap close reversal. When it started to reverse at the gap, what was the pattern? Red candle in the middle, green candle in the middle. After that, next 30 minutes was bullish, and then it started to trend up, right? What you're doing is, when you're using these strategies, gap close reversal, break and retest, right? And then breakdown and retest, when you're using those three main strategies with the levels, you're looking at the 30-minute chart and you're studying how the 30-minute candles worked and looked with those strategies. And you're also just studying how it worked when there was a reversal, when there was a shift in reversal, when there was a top, when there was a bottom. How did the 30-minute chart look right before the sell-off? How did the 30-minute chart look right before it spiked? Go back throughout the 30-minute chart and study all of the reactions of the break and retest, the higher floors. Right here, I'll give you some examples, right? Resistance, resistance. We had a break above the resistance. Oh, here's the higher floor. The higher floor, you see how this 30-minute candlestick closed above this previous resistance right here? That's bullish. It's going to try to spike to retest the wick. Here's the higher floor. Green, red, green. See how it's holding above this previous resistance for hours? That's all fucking bullish. So look at this 30-minute chart as a mirror, and if you're seeing the proper reflection at the levels I gave you, with the strategies I gave you, trade. Enter the trade. You're going to crush it. So that's what I would recommend. Use that information. You should be green without a doubt heading into tomorrow. You should be extremely confident. Especially the easiest, simplest day would be if we gap down. That's what I would prefer to happen. It might be a bit more difficult to be trading heading into tomorrow if we gap up and we have a strong bullish trend day. Just wait. Be patient, look for a floor, maybe 1 to 2 hours in between the zones I gave you. Previous day highs, gap, close reversal. Use the proper confirmations for the bottom. Use the proper confirmations for the break and retest. You don't have to be the first one to capture the trend. You don't have to capture the bottom. You don't have to capture the falling knife. I have strategies for that where we capture trend reversals. You don't have to do that. Once it's already signaled a reversal, you can use the break and retest. And then same thing for puts. You don't have to capture the exact top. You can wait for it to start to shift bearish, then use the breakdown retest, crack support, spike back up. Or you can use both. If you're more professional, you can use both, right? The tops, the bottoms, the breakdown, the retest, the breakout, and retest. 4 strategies. 2 trend reversals, trend reversal strategies for the top, trend reversal strategy for the bottom, break and retest for calls, break out above resistance, drop back down and retest, and then breakdown and retest for puts. That is 4 strategies. Use the 10-day, 30-minute chart as a reflection of the confirmations of how those strategies work, of how these key levels work. Wait for the perfect reflection within the market to enter the trade. If you use this information, you should be green and printing money at the speed of light heading into tomorrow. Now, let's get into Friday's trades. So in terms of Friday, we ended up going 4 for 4. That is a 100% success rate. 4 trades, 4 wins. Let me show you what we ended up doing. So in terms of the overall trade, as you can see right here, 624 SPY calls. 624 SPY calls for 44 cents a contract. So this is what we did right before 4th of July ended. We ended up trading the best setups at the best prices. We ended up making the biggest percentage gains within the market with the cheapest, lowest risk. 624 SPY calls for 44 cents a contract. As you can see, this was at 9:30 a.m. We have a real-time zero-day options train alert system. We print money at the speed of light. And look, within minutes, these are the quotes moving, 9:31 a.m., 9:31 a.m., 50 cents, 51 cents, 52 cents, 53 cents, 70 cents. Within 5 minutes, the trade went up over 60%. And then as you can see, it went to 83 cents at the speed of light. Fucking phenomenal. Set profit stops. 9:37 a.m. when the trade went from 40 to 80, set profit stops. That way, if the market has a big move against our trade, we get profit stopped out at the price we set it to, right? So that's a 100% plus win right there. Look at the next trade, 9:45 a.m. 625 SPY calls for 36 cents a contract. 36 cents a contract, and look, they print at the speed of light. 624 calls went in the money. These calls went in the money. Both of the trades went in the money. Look at the results. That is 2 massive wins where you are green enough to walk away for the rest of the day. And if you choose to keep on trading alongside with us, the most you risk is 25 to 50% of your gains, because we're never going to go green to red when we're green enough to walk away and we choose to keep on trading. So 624 SPY calls for 44 cents. ended up selling at 120 cents a contract. That's a 200% gain on the first trade of the day. The second trade, 625 SPY calls for 36 cents a contract. We ended up selling at 95 cents. That is another 200% gain. That is 2 wins and a 400% return within the first singular hour of trading SPY call options at the market open. Losing remains a personal choice. Now, you would think all of the winning might stop there, but no, we just keep on winning. Because it's unlimited winning and unlimited fucking printing when losing is a personal choice. So as you can see, that is 2 massive wins on the day. And then look at what we ended up doing right here. 12:34 p.m., 6275 SPX puts for 100 cents a contract. 12:40 p.m., 6285 SPX calls for 130 a contract. Look at what these calls ended up doing. The calls for 130 cents a contract quickly went to 265 cents a contract. And then in terms of the puts, as we were holding the puts, that was down. We were literally in on 2 SPX trades. Each had a different direction, right? 1 puts, 1 calls. Look, added to the puts. Holding the loser, adding to the puts. And look, both of the fucking trades printed. Are you seeing this? Both of the fucking trades printed. We are in on 2 different strikes, 2 different sides, and both of the fucking trades printed like fucking crazy. Who do you know is doing this? Holding losers, adding, turning them into fucking winners, and also having a winner literally hedged against the fucking loser, and they both fucking printed. Losing's a personal fucking choice. Do you understand? We broke the whole fucking system. We are winning when we're fucking losing. We're still fucking winning. It's unlimited fucking winning and unlimited fucking printing. So you tell me, man, who the fuck do you know is doing this? 6275 puts, 12:34 p.m. Right here, 6 minutes later, 6285 SPX calls, 130 cents. Sometimes when people hedge, only one of the trade works. But both of these fucking trades worked. And we added to the one that was down in this situation and it fucking printed like crazy. Look at the fucking results, man. SPX calls to 265 cents at the speed of fucking light. Adding. And then look at the puts. 500 a contract. The puts came back to life. 500 cents a contract. Look at these fucking trades, man. 6275 SPX puts for 100 cents a contract. 6285 SPX calls for 130 cents a contract. Look at this. This was fucking precision. Right here, 6285 SPX calls for 130 cents a contract. Ended up selling at 240 cents. Could have made 100% nearly on that. 6275 SPX puts for 100 cents a contract, added at 75 cents when we're down 25%, and look, sold at 460 cents. 460 cents. We got in a little bit too early on the puts, but we put in our max risk per trade, hold the trades. I tell you all the time, if we're down on a trade that goes down 50, 60, 70, 80, 90%, we hold it. There's no fucking stop loss. Our max risk per trade, what we put into the trade is the most we're willing to risk. 7 out of 10 times the trade comes back to life. Look at this. This fucking loser right here, this 6275 SPX puts from 100 cents. This fucking dropped 40 to 50% plus. It was down. We held it, and look, we're in at 100 cents. We're in at 75 cents. We sold it at 460. Fucking 500 fucking percent on a trade that was down 50%. Who do you know is making 500% on a trade that drops 50 fucking percent? And then, as it's fucking dropping, they fucking buy calls, make 100% on calls, and then when the puts come back to life, they add to the fucking puts. Who fucking prints like us? Fucking nobody. 4 trades, you could have made over fucking you could have made over 900%. Over 900 fucking percent. 900% returns in 4 fucking trades. We are fucking undeniable. If you want the fucking truth, if you want to trade alongside us in real time and gain access to the best real-time zero-day options trading alert system on the fucking planet, it is the first link down below in the description. And make sure that you use this game plan to print tomorrow, because we are going to fucking print, man. If you're serious about trading alongside the best, about gaining access to a real-time zero-day options trading alert system where you get to print and win non-stop, you get to try out our format, you get to experience this in real time. It is the first link down below within the description. We buy cheap, low risk, far out of the money, 0-date options. We're known for selling them deep in the money for the biggest percentage gains. We put in our max risk per trade into these trades. The most we lose is what we put into the trade. We don't get stopped out. There's no stop loss. If the market, if it goes against us and expires worthless and goes to zero, we lose what we put in, which was our max risk per trade. Could be a couple percentage of your account, your R multiple. Now, if the trade goes in our favor, when we're up 10% plus, we set profit stops. The reason why we set profit stops is to ensure that we don't go green to red. The reason why we move profit stops up higher to ensure if the market has a big fluctuation against our trade, we don't get back all of our gains because we get profit stopped out where we moved our profit stop to, right? It's a way to safely maximize your gains. Setting a profit stop is a way to make sure that you don't go green to red. Moving a profit stop up higher is to ensure that it's a safe way to keep on gaining within the market. And then eventually when it has a big fluctuation, you get profit stopped out where you kept on moving that profit stop to, where you set it to less, right? Where you keep on deciding to move it to, right? And another way we increase our wins is by adding to winners. We add to winners to double to triple the gains. And how can you add to winners in a safe way when you're increasing your position size? When you add to those winners, you quickly do it when you're up 10% plus because everybody knows when we're up small amounts, 10%, 20%, very, very small, 10, 20%. 10, 20%, that's fairly small when you're buying 6275 SPX puts at 100 cents and then they drop to 50% plus. Most traders, they would have been stopped out, but us adding when it's fucking down 25 cents and then selling for fucking 460%. That's what we do. We have systems that make people money. We have systems that print money at the speed of fucking light. And this isn't the only system that we have, the real-time zero-day options trade alert system. I already explained to you the game plan that can get you green and making money and test self-sufficiency before you even join our fucking group. So you can go ahead and test that system. That game plan that I shared with you, you can test it out. See how self-sufficient you are with it and see how fucking green you are with it. Because we're going to be very fucking green with it. And we're going to be buying the cheapest, lowest risk contracts with the biggest percentage gains. You want to know what 4 fucking wins looks like for us? 900% fucking returns. That's what it looks like for fucking us on this side. So if you want to fucking win, you want to surround yourself with the best. You want to surround yourself with multi-millionaire traders who've been in this market for over a fucking decade. And you want to trade alongside the fucking best and gain access to our real-time zero-day options trading alert system and gain access to our secure private network and community. It is the first link down below within the description. With that being said, I will see you guys tomorrow within the chat.